Today, we're talking more about why insurance renewals continue to increase and what in the heck is reinsurance. Hey everyone, it's Tia at Trailstone, and today I hope to help you understand one more reason our insurance rates continue to increase at an alarming rate. So today, we're talking reinsurance. The Insurance Information Institute describes reinsurance in this way. Reinsurance is insurance for insurance companies. It's a way of transferring some of the financial risk insurance companies assume in insuring cars, homes, and businesses to another insurance company, the reinsurer. When an insurance company issues an insurance policy, an auto insurance policy, for example, it assumes responsibility for paying for the cost of any accidents that occur within the parameters set out in the policy. By law, an insurer must have sufficient capital to ensure it will be able to pay all potential future claims related to the policies it issues. And remember this word, capital. It's key to our conversation today. This requirement protects consumers but limits the amount of business an insurer can take on. However, if the insurer can reduce its responsibility or liability for these claims by transferring a part of the liability to another insurer, it can lower the amount of capital it must maintain to satisfy regulators that it's in good financial health and will be able to pay claims of its policyholders. To put that another way, if they don't meet these capital standards, they may not be able to pay your claims. All right, shifting gears here. This is a basic understanding of reinsurance, and we don't have 6 hours to discuss the finer points of reinsurance, retrocession, intermediaries, and cedents. So let's talk about this in some simple generalities and why it's driving insurance rates up. So here are the basics. Let's outline this in 3 parts, okay? Try to keep up. First, by law, insurance companies are required to have a predetermined amount of capital on hand to cover potential claims. Okay, so let's use a round number like 50% of the risk they insure. If an insurance company has $1 million in risk, they're required to have 50% of the $1 million in reserves to cover claims if needed, or about $500,000. Second, the insurance companies are allowed to reinsure the capital reserve requirement with reinsurance companies or reinsurance investors. So the $500,000 in capital reserves the insurance company is required to have in reserve can be reinsured with an investor like a bank or a reinsurance company to cover the risk. And this is important to understand. The reinsurance investor receives a return on their investment and the insurance company frees up capital. Third, this process of reinsurance has been going on for decades, if not centuries, without too many issues until 2023. What changed in 2023? The reinsurance investors started asking for more investment return and less risk from the insurance companies. So here's a simplified example of the change. Remember, before 2023, the reinsurance investors would provide 50% of the capital requirement of the insurance carriers. Well, because of heavy insurance claim losses from 2019 through 2023, the reinsurance investors will now only provide 25% of the insurance reserve capital required. And to top it off, they're charging double the fee for less coverage. This change in the reinsurance markets caused multiple issues. To name a few, insurance companies had to find new reinsurance investors, or if they couldn't find a new investor, they would have to find actual capital, meaning cash, for their reserves. Easier said than done. Second, the cost structure for insurance companies increased because of the increased demand for return from the reinsurance investors. Last, and to make everything worse, because insurance companies didn't have the capital to cover the required reserves, the insurance companies had to greatly reduce their capacity for new business. This makes it very difficult for people to find insurance if they're non-renewed or their rates aren't affordable. For you insurance gurus out there, I know this is a very simplified view of how reinsurance works, and not all insurance companies are experiencing the reinsurance issues we discussed today. In fact, here at Trailstone Insurance Group, we work with more than 40 insurance companies, and many of our carriers had foreseen the issues in the reinsurance markets and planned ahead, meaning our insurance carriers are still writing new business at affordable rates. Also, if you've got questions about reinsurance, please put them in the comments below. And if you're paying too much for your insurance or your agent just doesn't understand reinsurance issues, please reach out to my team here at Trailstone Insurance Group. We'll do our best to find you a better rate for your insurance. Stay safe and claims free.